Hi guys, welcome back. So the market was growing well today. All the three indexes were up in general, especially NASDAQ was up 1.2%. Last Thursday, when a lot of people had some fear, thinking the market was going to go down again, I said that the bond yield issue would have less effect on the market, and I expect that to rebound from here. And then we saw that the market was up for 2 days since last Friday. And today it opened up high and had a gap up above the 20-day moving average. Right now, also passing the 5-day moving average and was rejected by the 30-day moving average around 13,465. And it was rejected here quite a few times in the past. So that's why we need to see it passing through for further growth. And then if we hide the moving average, we can see it more clear. So I have been saying that the index NASDAQ would move up and down within this range between the support and resistance. And until it can move past this resistance level, then we can confirm that the correction should be over. And for now, we have formed this recent upward trend. So it means we have a support here on this trend line. So that's why if it can backtest the support, that would be a buy-in opportunity as well. And if it breaks this trend line, the next support is on this line again, around 12,900. But I see this less of a chance. For now, I will see NASDAQ going up with this trend line. Another thing to point out is the VIX index. On Thursday, when we had some fear in the market, the VIX was up to 12% a day. And I said that I would expect the VIX to come down from here because I thought the market was using the bond yield effect to do some wash sell by creating some fear. And I see the bond yield effect less and less from here. So then today, it had reached a new low ever since the COVID had happened 1 year ago. If we zoom out, we can see that last year the VIX had gapped up in February and started to spike from there on. So the whole time the VIX was still moving above this gap. That's since the beginning of the COVID. And today it had finally reached a new low ever since we had the COVID and touching the gap, which was at 18.8 exactly. So for now, I expect this gap to act as a little bit support for the VIX. So the VIX would either bounce back up a little bit or just mainly move sideways until we close the gap. And that would mean the fear that had created by the COVID and the volatility of the market ever since 1 year ago because of the pandemic would be officially over. And the VIX should go back to the level like before, moving up and down a lower range because the VIX had been moving above 20 for more than a year already, and the market should eventually go back to more sanity. Now, one thing to mention is that today, even though the index were up, NASDAQ was growing quite well, but still a lot of the other stocks were down. I believe a lot of the stocks in our portfolio were down, and I think it's mainly because of this news. Since last Friday, the US Fed allows SLR exemption to expire. Now the SLR exemption was made last year in March in order to help boost the economy, to allow a lot of companies to get loans. And last week, the Fed had decided to not extend this and just let it expire. Well, from the upside, it means the Fed thinks the economy is getting back more on track and is more ready to ease off the policy. Well, that's a little bit of an upside, but on the other side, it would influence more of the companies that are small to medium caps and have poor balance sheet because it would affect the ability for them to get loans. So that's why in a short term, it should affect some of the stocks like the tech stocks and growth stocks that have low cash on balance. It is something to be aware of. Now, it doesn't mean that we should suddenly change our investment strategy and move everything towards the FANG, the mega cap, which all have sufficient cash balance, because I do think this is a short-term attack as long as we focus on the company's fundamental and be aware of the ones with too much risk of cash balance. Then we should be okay. It's something that we should watch out for a little bit. Now let's go over to our stocks. Some of the Discord members have asked why today a lot of the Chinese stocks were down, and we know that it's caused partly by the news about US, Canada, EU and UK's sanction of Chinese officials over Xinjiang issue. So we know that whenever there is a little bit political news, it always causes our Chinese stocks to drop. It had been like this for a while now, something that we might have gotten used to. Now, I think this issue had been going on for a while, for years. I saw some comments saying that they're sick of the political issue, they're sick of Chinese stocks investment, so they are going to completely sell out of all the Chinese stock positions. So does that mean we should change our strategy? Now for me, I think this issue had been going on for years already. And regardlessly, it did not affect the economic activities between the countries. It didn't stop the Chinese companies to grow, and it didn't stop the Chinese stocks to grow in the past few years. So that's why I would treat this as a temporary hit for some of the Chinese stocks. And overall, we can see that the political news did not cause our Chinese stocks to break support mostly, but rather just simply moving up and down, back testing some support. For Baby Neo, it had dropped 0.95% because in the morning it was trying to break through the 20-day moving average, which I had mentioned to be the resistance for a few days already, around 43.8. So it went back down, and it should still get supported by this $41. And then EH dropped more. It dropped 7.8% today. Partly, I think it's because of the law firm reminder of the class action. Now for this issue, we are still waiting for some official response from the company. Another thing is that I think it's also reacting earlier to the earning, because we saw that every earning had been a bomb recently, almost everyone. So I think it's normal for investors to try to sell out before the earning. So that's a little bit early response. And for now, it's backtesting the supports here at 42, where it was the biggest volume during the rebound from the bottom. So that's why today I have grabbed a little bit more EH at 42.5. I think some of the Discord members also added with me. Now, if it dropped below this, the next support is 38. And LKCO, of course, would be more affected by the political news because it was already the most heavily influenced by politics to begin with. So it makes sense for it to get attacked by the news today. And also last Friday, I said that LKCO had been growing almost every single day for 2 weeks already. And we do need to give it some time to take a break, rest, and consolidate before. So it came back to backtest the support of the 5-day moving average of 1.69 today, and it bounced back and closed above this. But after market, we saw the news of S&P Dow Jones indices says Luokan Technology Corp will not be considered for addition to its indices prior to May 8, 2021. So it's restating that because we are still unsure about how the hearing would go in May. So that's why when it was released in the aftermarket, it has caused the share price to go down further at the lowest of 1.58. But the good news is, on the other hand, Xiaomi has the right to be included in the indices again because of the temporary halt. So I guess we just need to wait and see the result of the hearing. And for now, LKCO would have the resistance level at 2.1 and have a support at 1.29. So we might likely see it moving up and down between this range. And first, we need to see whether the 30-day moving average would have the support. And tomorrow, it should be around 1.58 to 1.59. Next is ZAPP. ZAPP had broken the support of 250 moving average. And if it cannot get back up within a few days, it should most likely take some time at the bottom and move around between the range from 11 to 13 and consolidate before pushing through. I set stop loss to trim part of my position, so it had triggered today, and I would keep my original investment and just trim the part I have added, so my position is not too heavy for now. Luckin is still on fire today, the one that's saving my portfolio today again, up 12.5%. It has not only pushed through the 250-day moving average, also trying to close the big gap that was created on the day it filed Chapter 15. So far, it has closed the majority of it already, and basically pushing through back to the range before the Black Swan news. But because the volume was not very big, so that's why I would expect it to come back down some support first. Right now it has a support first at around 10.5, and then next is the 5-day moving average, but also moving fast. I think tomorrow it would be around 10.5 as well. YSG has created a new low today. If you're still holding it and you're at loss, what you can do is you might be able to buy the dip and then trim it at rebound at around 14.9 to 15.3 to be the first trim, and you might have to keep doing it to lower your cost, which was what I did with TUYA today. Ticker symbol TUYA. If you have watched my video last week, you know that this is an IPO stock. I rarely buy stock that just went public. So that's why I only have a very small position, which was 1% of my portfolio. And today, when it had a sharp decrease, I bought the dip at around 21.5, and then I sold what I bought in the morning at 23, and in the afternoon I bought it back again at 22.2. So after a few transactions, right now my cost has been averaged down to be 23.8, and I'm slightly at loss. So right now I would suggest to put a stop loss between 19 to 21, because 21 was the IPO price, and if it dropped below that, we may not know the bottom of it. But if your stop loss get triggered and you are out, at least you can see if the share price would get more stabilized before you consider to re-enter again. So if my stop loss get triggered, it doesn't mean I don't want to invest in TUYA. It just means that I can wait for the share price to stabilize first. One of the trade we did for SOS, we first bought in around 6 and sold it around 7 point something, and then re-enter at 6.2, and I have suggested to take profit around 8 point something. So if you haven't taken profit yet, right now we are at the support of this uptrend. So you can probably set a stop loss slightly below, let's say 6.5 to 6.6. So if it breaks the trend of this upward movement, you can exit first and wait for the share price to stabilize first. That would be my suggestion. Now that's it for the update today. And if you have enjoyed this video, please give me a big like and write me a great comment, and I will see you tomorrow. That's it, guys. Hope you can find my videos helpful. Make sure you subscribe to my channel and give me a big like. Thank you.